Over $1 billion in liquidations just shook the Bitcoin market today. Max Pain is at 110,000 and market makers are making it happen. Meanwhile, BlackRock just filed a premium ETF that's about income, and Q2 economic data is beating expectations across the board. Could this be the setup for the next big Bitcoin surge? I don't know. Listen up. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. Remember, this is for educational purposes only, not financial advice. If you want to stay ahead of Bitcoin and financial news, hit that like button, subscribe, and share this video with someone who loves crypto or Bitcoin especially. Let's talk Bitcoin first. Max Pain is sitting at 110,000. And that number is not just random. It's the level where market makers are targeting massive profits while retail traders face huge losses. Today, we saw over $1 billion in liquidations for trading those with Bitcoin or crypto in general with leverage. That means a huge chunk of traders got stopped out today in a flash. And the last 3 days have been brutal. Why does this matter to hodlers? Well, because every forced liquidation is essentially a transfer of Bitcoin from weak hands to strong hands. If you're hodling Bitcoin for the long term, this kind of volatility is actually a buying signal. For me, at least. Max Pain is a concept used in option markets where the price is manipulated to maximize losses for retail traders. Right now, the market is testing the nerves of those traders. But long-term hodlers, they know that when these things spike up or down, that's part of accumulation process. This is why watching the options market and open interest is so critical for anyone serious about Bitcoin or even stocks in general, honestly. Next, we have massive institutional news. BlackRock filed with the SEC for a premium Bitcoin income ETF, which I think is awesome. This is huge for multiple reasons. One, BlackRock is the largest asset manager in the world, and their ETF application signals mainstream adoption. Again, then you have a premium Bitcoin income ETF that allows institutions and accredited investors to earn yield on their Bitcoin holdings, which could drive demand. I do covered calls. They'll do it for you now. Historically, when BlackRock enters any market, it sets off a chain reaction across retail and institutional investors along the way. For hodlers, well, this is a reminder that Bitcoin is moving beyond speculation. The infrastructure or mainstream investment category is growing rapidly for Bitcoin. And the more Wall Street legitimizes Bitcoin, the stronger the long-term price fundamentals become. Now, I know it sounds weird on a scary 109 day, but 109,000 is still great, and it's going up, I promise you. Now, let's look at the macro side, because this is all connected. Today, we got multiple positive reports that surprised analysts that not only beat expectations, but also give us insight into how the economy is performing and why Bitcoin could continue to gain attention. First, Q2 GDP. The second quarter GDP came in stronger than analysts expected, signaling that the U.S. economy is still growing at a healthy pace. This shows that despite fears of a slowdown or recession, economic activity remains resilient. For Bitcoiners, strong GDP numbers can sometimes put pressure on risk assets like stocks, but they also indicate liquidity into systems, like cash flows that may eventually find its way to alternative assets like Bitcoin. Next, consumer spending. Americans are, well, let's just say they're opening their wallets. Q2 consumer spending beat estimates, showing that people continue to buy goods and services across the country. Retail, e-commerce, and durable goods sales all contributed to this strength. Now, why does this matter? Consumer confidence and spending patterns influence overall market sentiment. When traditional markets are healthy, investors have the resources and confidence to diversify into alternative assets like Bitcoin, either as a hedge or a growth play. And then we have jobless claims also came in better than expected today. Both initial and continual claims were lower than analysts projected. This tells us that the labor market is holding steady and that layoffs are not spiking dramatically. This is great news for a fearful economy. A stable labor market gives households more confidence and stability, which in turn it supports consumer spending. For Bitcoin holders, well, this may seem counterintuitive, but strong economic fundamentals often coincide with increased interest in hedges against inflation or future uncertainty, especially as more institutional players enter Bitcoin. And finally, durable goods and core durable goods orders, well, they exceeded projections as well. Durable goods, which is items that are meant to last several years, like cars, appliances, and industrial equipment, show that businesses and consumers are willing to invest for the long term. Core durable goods, which exclude volatile sectors like defense and aircraft, well, they give us an even clearer picture of sustained economic demand. For the Bitcoin community, these numbers matter because they reflect the overall health of the economy that Bitcoin is increasingly operating in, alongside not just US, but globally. But these reports are for the United States. Strong demand in the traditional economy creates capital that can eventually flow into crypto markets, particularly in institutions seeking alternative yield and diversification. So, in short, today's data tells a story of a resilient economy. GDP growth is strong, consumers are spending, the labor market is stable, and businesses continue to invest in durable goods. While this might sound like purely bullish economic news for traditional markets, it's actually a setup and going to set up an interesting dynamic for Bitcoin. As investors now have more capital to deploy, and many are increasingly choosing decentralized assets as a hedge or a growth strategy. This is exactly why macroeconomic awareness is so important for long-term holders like yourself. So you need to care because positive economic data often reduces fear in traditional markets, but it also creates liquidity. And this is what I've been telling you for weeks now. Investors may rotate some of that liquidity into alternative assets like Bitcoin for diversification, especially as they continue to lower rates, Fed rates, right? The prime rate. Even in strong economic conditions, Bitcoin continues to grow its narrative as digital gold, inflation hedge, and a decentralized store of value. Every day, there's more people buying into Bitcoin. So, family, here's the takeaway. Bitcoin, between Max Payne 110K, billion-dollar liquidations, BlackRock entering the space, and strong macro data, we have like this perfect storm brewing, especially for people like you and me. See, volatility is opportunity. At least that's what I believe. Liquidations and Max Payne levels create the chance to accumulate at discounted levels. Institutional adoption, while ETFs from giants like BlackRock, they bring legitimacy for price growth. And then there's macro tailwinds. Even positive economic data can indirectly benefit Bitcoin as investors seek digital hedges for their portfolio diversification. If you're holding Bitcoin long term, this is not just news. It's part of the roadmap for adoption and accumulation. The signals are clear and the momentum is building. Hodlers like yourself, this is exactly why we study these trends. And I do it for you so you don't have to spend all the time that I do. Now, I want to hear from you, though. This is one thing I do ask. With Bitcoin max paying at 110K and BlackRock filing a premium income Bitcoin ETF, and then you have Q2 economic data beating expectations, like which of those three things do you see as the best opportunity for us? Comment below. Let me know what you're thinking. And don't forget, like and please subscribe if you haven't already, and share this video with anyone who wants the latest real-time Bitcoin and financial news. I do this daily. I research it all day and night. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.